Assalamualaikum and good day everyone. Today we're going to talk about foreign fund management companies. Okay, now let's look into the background. What is a Malaysian foreign fund management company? So, a Malaysian foreign fund management company should be incorporated in Malaysia and licensed under the Capital Markets and Services Act 2007, and it should also be approved by Securities Commission (SC). It should have more than 50% of its paid-up capital be owned by foreign equity, and it provide fund management services to its clients, either foreign or local investors or both, to receive income. The company managed fund can be conventionally or in accordance with Sharia principles. So as you can see in the right hand side, income from the foreign fund management company would be from management fees as well as other income, and the expenses can be all the expenses that is wholly and exclusively to generate those income. As the company report the income under section 4A of the Income Tax Act, it should be also deduct the capital allowance as well as the losses. Specific tax treatment is reported in Section 60 capital G of the Income Tax Act 1967 as well as the Public Ruling 7/2019. Okay, the income from a foreign fund management company can be from the management service fees received from foreign or local investor, which is treated as business income under Section 4 small a, and other income which is reported under other sources such as rental. Management fees received from foreign and local investors will be treated as separate and distinct business sources. Okay, so we cannot mix up those two. Other income which is received by the company need to be reported by allocating to appropriate classification, which is either from local income or foreign income. Next, expenses, capital allowance and losses. These are to be accorded to appropriate classification of incomes, which is for foreign investors or for local investors, or if the company is Sharia, therefore it should be showed under Sharia, as well as it should be classified according to the sources, which is either from section 4A management services or from other sources such as section 4C or D. Tax rate for YA 2021 would be 24%, similar to foreign or local investors. So in this right hand side, you can see the format of tax computation for YA 2020 versus 2021. Basically, it's the same. You can find the adjusted income first and then statutory income by deducting the capital allowance and then add other source of income such as rental to get the aggregate income. And we can also less donation, if any, approved donation to get the total income, and next the chargeable income. Okay. However, the difference for YA 2020 and 2021 is in the tax rate, where in 2020 the tax rate is 10% for foreign investors. But for YA 2021, the tax rate is the same for foreign investors or local investors. Okay. And then for loss and capital allowance carry forward, we can deduct this from the same income. If the loss is from foreign, therefore we can carry forward and set off against foreign income for next year. Same to the capital allowance. Next, tax incentives. Tax incentives for foreign fund management companies can be from exemption of tax or lower tax rate. Okay, for exemption of tax payable, FFM should follow the Sharia principles and be a qualified company. So qualifying company should be incorporated under the Companies Act 2019, Malaysia Companies Act, and then resident in Malaysia and hold a license under the CMSA. And it should also carry the business of providing fund management services, not other type of activities. And then the exemption is in respect of the statutory income, and it shall be provided the exemption when the Securities Commission provides certificate for each year, which means that the company need to apply for the certificate for each year during the exemption period. And the exemption period for current budget is starting from YA 2021 until YA 2023. Okay. Next exemption or incentives is in the form of lower tax rate for the foreign fund management services only, which is this one is available for YA 2020 and prior only. Okay, as you can see in this table, if the type of investors 100% foreign equity or at least 30% of local equity, which means that foreign equity is 70%. The type of investors is considered as foreign. So when the type of investor is considered foreign, the tax rate for YA 2020 and prior is only 10%. However, starting from 2021 onwards, the tax rate has become 24%. So no more incentives in the form of lower tax rate for foreign fund management company. So these are the list of Islamic fund management companies that you can see and probably have information on this. Like Aberdeen Standard Islamic Investments, Malaysia Sdn Bhd. Okay, they have incorporated the company in Malaysia so that they can enjoy the exemption. And some will BIMB, Arm Islamic, and Kenanga Islamic Investors Berhad. Okay, so now let's look into comprehensive examples of Prince International Fund Management Sdn Bhd. Okay, the company was established as FFM in 2010 and had received the Securities Commission approval to provide fund management services to both foreign and local investors. The following incomes and expenses were reported by PIFM, the Prince International Fund Management Neighborhood, for the year ended 31st December 2020 and 31st December 2021. Okay, the information given for you for 2 years, YA 2020 and YA 2021, and it has split between fund management services to foreign as well as to local investors. Required compute the chargeable income for the company for YA 2020 as well as YA 2021. So you need to calculate for 2 years. Why the question asks you to calculate for 2 years? Because to show the different treatment in YA 2020 and YA 2021, especially when there is unabsorbed loss and capital allowance, and also the difference in tax rates. Okay, luckily in this example there is no other income, so let's try. How is it? Okay, this is the suggested solution. What you need to do is to calculate for YA 2020 first, and then to split the income from fund management services to foreign investors as well as fund management services to local investors. Okay, so let's look into 2020 first. Okay, you just list down all the income according to the type of income, whether foreign or local. And since we don't have any other income, which means that the management services is under section 4A. Okay, so for section 4A, we can deduct the allowable expenses to receive adjusted income or loss. For foreign fund management services to foreign investors, since the allowable expenses is more than management service fees, we receive adjusted loss. However, for local investors, we receive adjusted income of 150,000 here. Okay, since the foreign investors receive loss, we cannot absorb the capital allowance. Okay, see capital allowance here, dash. And therefore, our statutory income would become 0. And we cannot also find the chargeable income. Chargeable income will be nil. Tax rate, okay, if there is a chargeable income, the tax rate for YA 2020 is 10%. So please remember that. And for this case, the tax payable is nil. Just remember that we need to carry forward the unabsorbed loss as well as the capital allowance of 20,000, because for this year, the company suffer loss. Okay, these two items cannot be absorbed by the fund management services to local. Okay, we need to prepare split account. Okay, for local investors, since we receive adjusted income 150,000, we can absorb the capital allowance of 10,000 and receive statutory income of 140,000. There is no loss brought forward, and therefore this is also 140,000 the total and chargeable income. We time the tax rate of 24% for local investors, and we receive the tax payable of 33,600. Okay, now let's move to YA 2021. Okay, YA 2021, we just plug in the income and expenses to get the adjusted income. So we managed to get 400,000 adjusted income for foreign investors. Therefore, we can absorb the capital allowance, okay, for current year as well as brought forward capital allowance. Okay, so brought forward capital allowance 10,000 and current year 10,000. So we absorb both, and our statutory income for YA 2021 is 370,000 for foreign investors. And therefore, we can also deduct the loss brought forward from last year, 10,000, and receive the total or chargeable income, 360,000. So, for 2021, the tax rate has increased to 24%, which is equal to the local investors. Okay, please note here, tax rate 24%, and therefore tax payable is 86,400 for foreign fund management services. Okay. Whereas for local fund management services, we suffer loss this time for local. So this loss cannot be set off by the foreign investors. It should be carried forward to next year. So for local investors, 2021, everything is nil, and the tax rate is 24%. However, since chargeable income is nil, so tax payable also nil. The current year unabsorbed loss will be carried forward 20,000, as well as the capital allowance for that year also will be carried forward to next year. So with that, thank you for your attention. My advice to you all is that listen with curiosity, speak with honesty, and act with integrity. So that is for me for this time. Okay, would you like to be a fund manager? If yes, then you can watch the YouTube link that I provided here. Thank you again.